Hello and welcome back. Today is a pretty special day. I'm not even going to start with the usual disclaimer because I've been thinking there isn't anything here for sale. And if people that are still watching still think so, there's something fucking wrong with you. And if there are new people coming in, they'll find it out really quick because I usually get asked questions along the lines of how much does it cost to copy trade you or some bullshit like that. So by high demand here, we're gonna get off to a start. I have made a video on some macroeconomics. It's generally something I try to stay away from because I don't want to get into politicized topics that can polarize people. When people hold strong beliefs regarding macroeconomics, it will just annoy them when you're not saying things that align with their ideology. So I've been trying to stay away from that, but there are certain things, such as trade and tariffs, that are kind of impossible to avoid because of how often I use them when candle reading and how often I mention them in headline risk. It has also been a question I've been getting quite a lot, and therefore I'm going to answer or attempt to answer it in a two-part series. It was originally going to be a three-part series, but I condensed it down, making some infographics and just writing some things down. So I made it all shorter. The first part here is going to be about understanding, and the second part is going to be about application. So if you want to see what's right or wrong about this, you know the saying, put your money where your fucking mouth is, yeah? If you can put your fucking money on something, which we do all the time, I use these principles all the fucking time, betting my money on them, that I'm right. And we are right. Most of the time. We are right enough, with a good enough RR, to be profitable. And that's all we need. So I've made some notes here that we're going to go through. Tariffs. Today we're going to start talking about what are they? Well, tariffs are, like anything else, just a form of taxation. That's all it is. But it is a very quick and hard form of taxation because it affects all imports and all exports very much. I'm going to remove these points as I go through them. Or maybe I should. Nah, if you want to screenshot it, I don't think there's much need for it. But if you want to, yeah, go ahead. So what happens when tariffs are removed? It has an effect very similar to automation. If you don't know how automating things work, it is just productivity going higher without an expansion of the labor force. That's the factor we're looking at, okay? So you're expanding that sector, that's what the higher productivity is, without additional costs. Cost in the form of labor. You might have some initial automation costs, but not the standard automation labor costs. So here are some infographics I made pertaining to Norway, because I happen to live in Norway, okay? In case you didn't know that. So if Norway, we're going to use agriculture, food, things you buy to eat, and things you buy to drink, as the example here, because I live in Norway. So if Norway removed all its trade barriers, and all their non-tariff related trade barriers as well, not just the tariff ones, because high enough tariffs are just a full-on blockade. So therefore, we have to count those in as well. So tariff barriers and non-tariff barriers. If Norway dropped or removed all of those, what would happen to food products in Norway? What would happen to the price? What would happen to wages, labor, that kind of thing? Why this is important, it will all come around in the end, and you'll see. So what would happen is I use around $1,684 a month. I put it out in USD, so we're on a more universal scale. Food prices, there's an extra 2 there. Food prices would drop by around 50% in Norway if we started importing everything that would be cheaper to import. So my food price, or my average grocery bill for the month, would go down from $1,684 to $842. That's for me, myself. What does that really mean? That means more disposable income. In my case, that means I would have bought more shares, most likely, which is just a jet fuel into the economy. And here I brought up an infographic that I made myself because I couldn't find one. For the average Norwegian, how much does the average Norwegian spend on food for their disposable income? Well, the average Norwegian spends around 17% of their disposable income on food in grocery stores. If a full free trade policy was implemented, that would have dropped to 11%. That means, in effect, a 6% increase in purchase power. Real wages would, in effect, mean 6% more. That it would have a 6% higher value than it currently does. And by the way, there are arguments. I'm staying away from the political component here. You can say, I want to have food security and blah, blah, blah. I don't want to import from anyone. Or the most popular one, I support our local farmers. So if you want to do that, yeah. But that's besides the point. I'm not advocating for any policy here. I'm explaining how it works for application in the markets for easier candle reading. Okay? So if we simply started importing food, we'd have 6% higher disposable incomes. That's a lot, mind you. It might not sound like a lot, but it is a lot. So then another thing to factor in is what the fuck would happen to the agricultural industry? Well, around 70% of the industry here in Norway, equating to 40,000 people, would lose their jobs. They would be gone. Bye. Get the fuck out of here. You're done. There would be 270,000 new jobs, like I've written here, mostly consumer-driven jobs. Increased liquidity in the economy, and it would expand it in every single direction, is what I've written down. Which means some people would buy stocks, some people would save more, some people would try to start companies, some people would use that for their new ideas, so probably new exports, that kind of thing. Also, there's one thing the AI didn't factor in here, I can clearly see, is that we're in the Schengen deal, and that means our neighbors can drive over the border really easily. We'd have lower food prices than Sweden and Denmark, so people would drive in from Sweden and Denmark to buy food, which again would be more consumer-based jobs. However, just keep going. That's not the point right now. Let's remove this pay shit. So the average pay for those 40,000 workers is $52,000, and that's with heavy subsidies. Those would disappear. So there would be an increase in wages without subsidy. So government revenue would go up quite a lot, like I mentioned here. There will be a 23% wage increase in the sectors hit, as in the 40,000 lost, and they will be relocated, and there will be an expansion with just a 23% wage increase. Because that sector would no longer be subsidized, we'd get, and also the tax revenue from the consumption, of course, we'd get about $9.2 billion more in tax revenue. And that's with the tariff revenue loss accounted for. And I have an infographic for that here as well. Thankfully, the dollar is a pretty nice 1 to 10. So that would be 9.2 US dollars, 92 billion NOK. There we go. Now I've explained tariffs in a very simple manner for you, being apolitical, because I don't want this channel to be about politics. I want it to be about trading, finance. That's all it's about. I mean, there's no ban on it if you want to talk shit in the Discord or argue about tariffs or whatever the fuck. And I mean, if you extrapolate on that as well, the beyond, not the Discord, but beyond the economic factors, I mean, most likely the fucking Norwegian government will probably just give it to Ukraine or something, the Amazon forests. But they could have cut, for example, income taxes, 92 billion NOK. That'll be about 5%. Another 5%. Let me think. Yeah, about 5% would be, yeah, not statically but dynamically, around 5% increase in disposable incomes. Therefore, with that mentioned, you can probably understand why the markets get so upset when someone like Trump mentions, boom, fuck China, we're gonna go hard on China, we're gonna do 100% tariffs, we're gonna do 100% on India as well, we're gonna do fucking 500%, like Lindsey Graham said, we're gonna fucking tariff the whole fucking world, all to save Ukraine, whatever. Maybe you support that very much. Feel free to do so. That's your pejorative. Regardless, I hope now with this video you can better understand why markets are reacting the way they are and why we've been seeing the breakout market we've been seeing because of this large tariff market. In the next tariff video, I'm going to talk about application. How can this help you when you open your chart? This is you. I'm broke. Where's my chart? I'm going to go paper trade. So you open this bullshit, right? And you got to understand what's going on here. There's breakouts just from headline risk, and they're valid with the TA as well, with my price action strategy. How can you read into that through tariffs? How can you understand the dollar index through tariffs? We're going to get much more into the trading side, or the trading aspect of the whole tariff debacle afterwards. But I want you to have a baseline understanding of it before I do that. And that's all I've got for now. So if you got any questions though about tariffs, if there's anything you didn't understand, you can message me. If you leave a comment in the YouTube channel, I always answer those. There will be a link to my Discord in the description. You can hop in there if anyone is curious about anything regarding tariffs. You can just ask me or ping me, or I mean, you can have an inferiority complex, think you know it all, and be good and be a broke as well. Either way, I'm here. Videos are gonna get uploaded. Discord's gonna be in the description. Thank you for watching. Bye bye. See you in part 2, yeah?